You probably want to write this down because this is the beginning phase of the stock market business cycle, and it's the most important phase for trading the system that I'm going to show you. Accumulation first is characterized by little or no price rise. Now that's interesting, and here's why that's interesting. During the accumulation phase, the market manipulators are trying to buy as much stock as they possibly can before they move the stock into the markup phase. So they have to take little bites at a time. This is done with a little bit of volume because they don't want the public to know what's going on, because if the public gets involved, they buy the price up before the manipulators are able to accumulate their large position, and that's not what they want. So typically, when a stock is under accumulation, there's going to be very little rise in price. There's going to be low average trading volume. The price is going to have a very definable low and high. And the reason for that is they want to keep the volatility down so the price of the accumulated stock is stable. Another thing that you will typically see on the better accumulation patterns is long, wide smiles. And I'm going to show you exactly what that looks like on the chart. But remember, we buy smiles and we sell frowns. Furthermore, during the accumulation phase, you're typically going to see a gradual rise in the on-balance volume line. So when you see all of these things together in a single security, that tells you that that particular stock is in the accumulation phase and that its next phase is going to be the markup phase unless something changes in the underlying market conditions. So we're looking for little or no rise in price, low average volume, occasional volume spikes, clearly definable low and high periods, a long wide smile or a series of small smiles, and a gradual rise in on-balance volume. When you see those things all on the same security, that's when your interest should be piqued, and that's when you should be ready to place a trade. This is a stock that I actually did trade based on spotting the accumulation phase. This is a screenshot of my actual trading account. This is the chart that I used to trade it with. And as you can see here, I entered this particular trade in November. And when the screenshot was taken, I was still in this trade and was profitable by about $3,700. I can tell you that as of the recording today, I am no longer in this position. I actually closed it out. Now, let's talk about what accumulation looks like. We mentioned on the other slide some characteristics that you want to see on a stock pattern when you're looking for accumulation. And so on this particular chart, we have rising on-balance volume all the way through the whole chart. That means there's some pretty aggressive buying going on. There's almost no dips all the way through this. During this period here, for about 3 months, you can see that the stock is trading in a tight, highly definable low and high period. Exactly what we're supposed to be looking for. In addition, the relative volume, those are these bars down here, is low. There's not a lot of excitement being generated about this stock, but it's still being bought. There are also occasional volume spikes. Again, this is exactly what we're looking for on a stock that we believe is about to enter the markup phase. Now, if we get into August, we see there's a huge spike in trading volume in August, followed by a rally in prices. And then prices fell back into another accumulation period. Now, it's possible that you could have been watching this stock placed a trade into this breakout, traded it all the way up, and then we're stopped out, and then the price fell back into this accumulation period, and you can trade the same security again. It's not against the rules. We trade in and out of the same stock. Now, I didn't trade this particular peak. When we move through September, October, and November on this particular security, let's take a look again at what happens with the characteristics of this stock. Volume again becomes quiet with occasional spikes. The on-balance volume line, which peaked back here, slowly sloped down, and then in September, again, it started creeping back up. This is exactly what we're looking for. Finally, we have this long smile in prices. Also, there's a smile with the volume. This chart is being friendly. It's smiling. It's saying, please, come by me. All through this area here, I am identifying this as the accumulation phase. This breakout area is the beginning of the markup phase. And then this run through here is the markup phase. And this violent price churning at the top is possibly distribution. Now, we place orders to follow the market up. So if prices start to move against us, our position is closed out, whether it's a profit or a loss. In this particular trade, it was closed out in this general area. I don't remember the exact price, and this was a profitable trade for me. I bought on the breakout of the price here, rode it all the way up for this 2.5 months, slowly moving my stop loss up behind the market. Let's take a look at a different stock and a different chart. Okay, this is a completely different company, and what I want you to look at on this chart is, again, you can see a couple of different phases of the stock price cycle taking place over a period of a couple of years. Right up in here on this peak is a distribution area. And the distribution area is always followed by a markdown. As you see, prices went down for almost 2 years on this particular security. That's a long markdown area. Now, if you're inclined to sell short, once you identify a distribution area, we trade them almost exactly the same way as we trade the accumulation pattern. You place an order when the price breaks out. In this case, it breaks to the downside. You sell the stock short. As the price falls, you move your sell order down behind the falling price. And when the trend finally stops moving or reverses, or you get stopped out, that's it. You're done trading, and then you look for another opportunity. But by identifying the different phases that a stock goes through, you can identify what is most likely to happen next in that price's chart pattern. So here we're looking at a 5-year daily chart of this particular stock price. We see distribution, we see markdown, and we see down here in this little oval what looks to me like a fresh accumulation period. Now, this is that same chart, but it's zoomed in. Instead of looking at 5 years of price history, we're looking at 2 years of price history. And if we look at this chart, again, I have this oval here so you can see what I believe was accumulation. During this accumulation period, it lasted almost a full year. So that's a pretty long time period for a stock to be slowly getting accumulated. And as you can see, this is a chart that was taken live from my account. I did trade this stock at the time of this recording. I'm still in it. I'm not recommending you trade it. I'm just telling you that I have traded it. And as of this recording, I'm still in it. Let's take a look at the chart again. Now we've zoomed in even closer. Instead of looking at 2 years trading activity, we're looking at about a year and a half here. As you can see, again, we have the price is trading in a pretty discernible price pattern here. The low for this area has been about 40 cents. The high has been about 80 cents. Now, on a stock that cheap, it has a 100% trading range, but we're only talking about pennies here, so let's not get too excited. The point is, when you look at the chart, you can clearly see that when it gets to about the 80 range, it stops going up, and when it gets to about the 40 range, it stops going down. It's clearly definable. It just leaps out at you right off the chart. You don't need any of the drawings. You don't need any special extra indicators. You can just see what's going on.